Well, more now on today's Fed decision and the expectations for quantitative easing. I want to head now to the Chicago Mercantile Exchange, where Sara Eisen is standing by with a special guest. Sara.
Betty, and he is someone who was in the Bernanke Fed, Randall Kroszner. He is now the professor at University of Chicago's Booth School of Business, a former Fed governor. Randy says it is the right time and the right place for QE2. Explain.
I think it's really important for the Fed to be ahead of the curve. There's a small chance, not a very large chance, but a small chance of deflation expectations coming up. And I think it's really important that the Fed prevent that from happening.
What does Ben Bernanke say? What is the message?
It's going to be very difficult for him to convey in the FOMC statement, probably 3 sentences, answers to a $1 trillion question. So I think there'll be a discussion of some support that will be coming out probably on a monthly basis, probably some time horizon, and a rough idea of the amount. But it's probably going to be somewhat open-ended so that if things start going south, they can act very quickly.
What is the action plan from here? How does he get it out of this?
Well, I think by structuring it this way of a certain amount per month, it makes it very easy to start taking it back if things start turning around. So I think it's a really good insurance plan against the downside risk of deflation.
And you've seen what's happened with the markets. The dollar has lost more than 6% of its value since August. Is the Fed trying to devalue the dollar?
There's no, well, I'm not there, so I can't say, but I don't think there's any explicit plan on that. I think there's an understanding there's a consequence of providing more quantitative easing that'll probably weaken the currency, but the main focus is trying to boost economic growth and prevent deflation.
Former Fed Chairman Paul Volcker said that some people are worried that this move toward more quantitative easing will create inflation. That's a concern. But you're not concerned about that.
Well, it is a concern. This is a very difficult balancing act that the FOMC is trying to do, of trying to boost inflation and inflation expectations a little bit to avoid the downside risk of deflation, but without those inflation expectations becoming unanchored. There really hasn't been a successful central bank being successful in pulling this off. I think if anyone's going to do it, it's going to be the Bernanke Fed.
It's been hard to find anyone that says that QE2 will provide a significant boost to the economy. What do you say?
Well, I think it's necessary to provide the foundation for growth. It's not sufficient with all the uncertainties in the political situation, and particularly with respect to fiscal policy and tax policy. Those would be the necessary conditions to get growth going. But I really think of this as buying an insurance policy against a very bad downside outcome.
Talk a little bit about the connection between the fiscal policy and the monetary policy. Does the Fed care about the outcome of the elections yesterday?
Well, it doesn't care about the outcome whether it's Republicans or Democrats. It does care about what it means for fiscal policy. We could have a very difficult situation if we don't get the fiscal circumstances under control. If taxes suddenly zoom up, that could be very difficult for growth in the short run. But we have to deal with the long-run fiscal problem also, because otherwise that could lead to disorderly devaluation of the dollar, could lead to spikes in interest rates. So we've got to do something that's reasonable in the short run, not killing growth, and something that'll deal with the longer run fiscal situation.
Some of the traders I was talking to behind me here at the CME group are concerned that the Fed can't get itself out of this mess, that it will take years and years to raise interest rates and to get all this liquidity out of the system.
Well, it's certainly going to take some time, but I think the structure is such that they'll be able to do it in a gradual and systematic way. So what they can do when the time comes is they can start taking back some of this additional quantitative easing. Then they can take back some of the reinvestment of the mortgage portfolio into treasuries, and then start raising interest rates. Because I think it's really important to do this in a smooth way.
Okay, smooth way. Betty, back to you. Randall Kroszner, former Fed governor, says if anyone can boost the economy, it is the Bernanke Fed.